Welcome into a daily editorial here on the KE Report. In this daily editorial, I am chatting with Jordan Roy-Byrne. He is the founder and editor of the Daily Gold. And Jordan, the first comment that I want from you involves gold versus foreign currencies. Because, well, one thing that we can be sure of is that the US dollar, especially against the euro, continues its move down and relative breakdown. But you usually compare gold against other foreign currencies to see how broad-based the rally is. What's some of your recent numbers and some of the recent charts told you?
Right. Well, one way you can simply look at this, if you're listening at home, is you could just look at gold divided by the ETF UDN on stock charts, because UDN, I mean, some people look at UUP, which is the dollar ETF. Now, UDN is the inverse dollar ETF. So it's basically the inverse basket of the dollar. So if you're charting gold against UDN, that gives you a look at gold against foreign currencies. Now, obviously, the euro, because it's the dollar index, has a very big weighting there. But looking at this chart, Corey, it's right at important resistance. I mean, it's been testing. It's testing a trend line right now. If you go back to 2017, you connect the May peak through the August-September peak up to where we are now. It's at some very important moving average resistance. The key really is that when we see the next leg higher in the sector, presuming that will happen, the key is that this gold against foreign currencies chart makes a big move that's commensurate with what we're seeing in gold. I mean, obviously the dollar, it's hard to argue that it's not in a bear market now. And that's obviously good for gold, and it's mostly been driving the move. I don't want to say all of it, but when we see precious metals try to make that next move higher and gold try and break above the 2016 high, it has to be a broad-based move. We need to see gold performing very well in relative terms. And I'm not going to say it's been performing poorly in recent weeks, because looking at the weekly candle chart of gold against foreign currencies, I mean, it's been up almost every week the last 5 weeks. So it's doing fine, but it's just, it's not, I guess, as strong as gold in US dollar terms. And that's something I'm looking at, not immediately, but I guess in the next couple months as this market tries to make that real big breakout move. I want to see a broad-based move. I want to see relative strength from gold. I don't want to see it being driven by dollar weakness, because there's only so far that kind of a move can go.
Okay, so Jordan, let's look at the stocks too, because again, it hasn't been a broad-based recovery, which maybe is again just showing how much of a dollar weakness move this is for gold. We're seeing the bigger miners do well, relatively better, but just looking at GDX, there still isn't a breakout, and we're still almost 30% away from the highs put back in 2016. What are your comments on the stock's reaction to the precious metals, again, doing pretty well?
It's interesting because the stocks look like, I mean, I want to see how they act after this peak, because peak's kind of a strong word, but looking at GDX, it's trading almost at 24.5 as we're recording this. There's clear resistance at 25.5 for GDX, and that's the February 2017 peak and the September 2017 peak. And as I said, as we're recording this, gold is only about a point below that. So a little bit more upside in GDX until it hits that resistance. GDXJ, of course, if you look at a long-term chart, a 1 or 2 year chart, it's been lagging a little bit as it's still a ways below that February 2017 peak, trading at about 35.5 as we record this. But there's resistance at 37.5 or 38. So I'm looking for GDXJ to get up to 38, Corey, and probably pull back along with GDX, which should pull back from that 25.5 level. But I think, if we have any kind of sustained correction or pullback there, I mean, maybe we won't. But the key is, after these markets hit those levels, the key is to see how they're acting then. I mean, if gold's going down, 20 or 30 bucks, but these miners are acting like there's barely any weakness in gold, that's a really good sign. So even though, I mean, you can make the case that the miners have been lagging, but just if you look at the last 15, 20 years or so, I mean, what tends to happen when you get these bull moves is when the markets are consolidating or the sector's consolidating, gold always is outperforming. Then when the market starts to rise, gold can outperform for a little bit, or the miners are outperforming. But I think we're getting to the point, Corey, uh, when we're close enough to seeing the miners really start to really outperform and then silver start to really outperform. We're not there yet, but I think that will happen when we take out these resistance levels. In other words, around 38 for GDXJ, definitely 25.5 for GDX. So if we, and also gold, I mean, when we see gold break above the 2016 high, 1365, 1370, whatever it is, I think that's going to be the point in time when you'll see the juniors and silver really start to pick up leadership. So we're not quite there yet, but I think close enough. I think we'll see it at some point this year.
That's really just a function, too, of this long-term base that the metals are putting in. It's not a V-shaped recovery. We are over 2 years away from the bottom that was put in at the tail end of 2015. It's just one of those markets, again, right, Jordan, where it takes time for that pop to come, but the longer we build this base, the more sustainable the next run should be. Is that correct?
Correct. And I mean, that's how precious metals trade generally. I mean, they don't just go up like every day or every year like the stock market has been doing. You don't see those kind of moves in precious metals. In a bull market, I mean, you've seen impulsive advances and then you see long consolidations. Now, this is it's a fairly long consolidation, and it's not a super bullish consolidation because we're not consolidating around the highs. But that being said, we do have a good base here, and the miners, despite this long correction and fairly sizable correction, they have held above all the technical retracement. So they've digested the gains fairly well, and this has been going on for roughly 18 months or so. And when they do start to break out, I mean, that long consolidation, that long base is, I mean, just think of the market going back and forth. You have all these buyers and sellers interacting, and it's the same thing with gold. I mean, you can look at gold. Moving on to gold here, you can look at gold and you can draw a trendline resistance going back to 2013. And I mean, if gold makes a strong breakout above 1375, 1400, I mean, there's a potential measured breakout target of 1700 there, just based on the last 4 or 5 years and that long and wide consolidation. So I mean, and you can look at the same thing on the GDX and GDXJ. You can actually draw necklines going back 4 or 5 years. So the consolidation of the last 18 months, back to what I was saying, Corey, is, I mean, you have buyers and sellers that are interacting. I mean, looking at charts and technicals, you're analyzing supply and demand. So the supply and demand for miners is you have buyers and sellers have been going back and forth for 18 months, and no one's really been able to make any traction. And once we get a breakout to the upside, the market knows that the bulls have won. And so all these people that sold or were sellers in the last 18 months, they now have to become buyers if they want to participate in this market. And so, I mean, that's what is going to happen at some point this year. You're going to see the miners break out from this resistance, and the market then will know that this market is breaking out. It's moving in bull territory. And that's what will, really could launch a really strong market, over the next 12, 18, 24 months.
Okay, so here's a broad question for you, Jordan. Is it going to be one event? Is it going to be a combination of a couple events that help the metals and the metals stocks break out?
Well, I mean, it's always hard to predict why, and there's great traders and money managers always say, who cares about the why, because that comes later. The market discounts things in advance. So we're not really sure what it's going to be, but I think if we're just looking at what's happening, the inflation, with the way commodities are performing, and especially precious metals in the last month or so, it looks like, and also looking at bonds, and that's something else we've talked about, the potential long-term breakdown in bond prices. So there's these other things that the market, or that are happening, or that the market is starting to discount. In other words, which would be, higher inflation, long-term bond price breakdown would mean higher inflation expectations. So while those things haven't exactly happened to a T yet, they appear to be in motion. And on top of that, I mean, we haven't mentioned the stock market, but on top of that, if you throw in a 7 or 10% correction in the S&P 500 or just any correction, that would also be bullish for precious metals. So we see these types of things that they haven't quite happened yet, but they're starting to be set in motion. And once you have something like higher inflation expectations or higher price inflation being set by the market, I should say they're starting to discount these things in advance. I mean, it's a really big deal. I mean, these aren't just like head fakes where they happen for a couple months. I mean, if you look at the charts, you can tell that, as we talked about before, there's potential for a massive multi-year breakout, and that kind of aligns with higher inflation this year, potentially maybe infrastructure spending in the next year, a long-term breakdown in bonds, which would raise inflation expectations. And it looks like Federal Reserve policy. I mean, if we do see inflation pick up, they're not going to fight that. They're not going. There's no Paul Volcker here who's going to jack interest rates super high. It's just not going to happen. When inflation gets going, they're going to let it run. They're not going to raise rates fast enough. And I think the market is, as I said, starting to discount some of these things. They haven't quite happened yet. But remember, Corey, the market always does. It discounts in advance. So the big breakouts that we could see this year in gold stocks and gold and silver as well, those are probably going to happen before all these other things happen because that's just the way markets work. They discount in advance.
They do. You're absolutely right, and it is interesting to hear what you're saying because I'm thinking the same thing. There are a lot of different factors that are starting to line up this year. It still might take a little time to develop, but the markets are really starting to tell us a different story than they were telling us last year in terms of yields and even in terms of some of the inflation markets that we can look to. Hey, it could be a very good year for metals. It's still going to maybe take some time, but first and foremost, it would sure be nice to see at least a short-term breakout above the range that we've been trading in for quite a while. Jordan, great chatting with you. Thanks for sharing some of your thoughts, and everybody, please click that link below and go visit Jordan's site, see what he has to offer. Thanks, Jordan.